Hey traders, this is a training tutorial of our portfolio margin strategy. There's 5 components to it. It looks to generate about $16,000 a month of income. That's the goal. I want to go over the semantics of it, the individual segments of it, and make sure that there's any questions you have, you can let me know in the comments section. Okay, let's jump into this. Now, a couple things that I like to mention right off the bat. Of course, we know that there's never any guarantees in trading, but this has been a highly successful program for me in my larger portfolio, and this is something that we are now adding to our model portfolio. Now, one of the challenges with trading is that trading is very discriminatory. It really does vary in terms of opportunity based on how much money you have to trade. And the reality is that the more money that you have to put to work, the more strategies you can avail yourself of, the better you can hedge yourself. Generally, the more success you have. So I've been a little reticent over the years to add any high dollar, quote unquote, high dollar trading strategies to the trading room, because I don't want to disassociate us from the masses and basically turn people off that don't have a substantial amount of money to go trade. But we do have a lot of members that have a lot of money. There's a lot of our members that are trading 7 and even 8 figures in our community. And so it's just appropriate to have a higher level trading system in place. At the same time, I want to just stay in your mind that we have programs for $200, right? If you have $200 to put to work in a trading system, a pairs trade is fantastic. We did a trade this past week in a pairs trade with eBay and Amazon that brought in about a 12% return. You could have done that trade with $226. That was the minimum amount that you had to put into it. So we have something for everything. This is for higher level accounts, okay? And it has to do with taking advantage of portfolio margin, trying to maximize that leverage. And there's a couple of aspects to that. But the first thing that we need to talk about as we look at this is how it works, how we put it together, and what the goal is of the system. So again, it is a 5-point diversification approach. There's 5 different components working inside of this portfolio margin approach. We're shooting for roughly about $16,000 a month of income. Again, there's no guarantees, but that's what the potential is. That would equate to almost $200,000 a year. And that's maybe not enough for everybody to live the lifestyle that they would dream, but it's substantive. It's enough that I think most people would say, hey, this is something that maybe I should investigate, okay? Now, what is portfolio margin? Well, every broker varies a little bit in terms of how they vary from standard Reg T margin versus portfolio margin. They also vary on how much money you have to have with them. Some brokers are as high as $250,000. Some are as low as $150,000. But when you hit their level of requirements, you get this portfolio margin, which is basically different from the standard 2-to-1 leverage that you get with normal margin. Normal margin, if you want to, buy $20,000 worth of stock, you would have to put up $10,000 of that. 2-to-1 leverage. Well, again, different brokers are based on different levels, but at Tasty Trade, which is where I trade, you can get almost 7-to-1 leverage. Now, you think, well, that's a double-edged sword, right? More leverage can mean more risk. That's absolutely true. But what you'll find is that we actually utilize that extra leverage to deleverage ourselves. So yes, this is a 300. I've put 300,000 of my own money into our model portfolio to trade this strategy with our group. In addition to that, I have $100,000 of my own money working on what we call the model portfolio. This is what most everybody trades in our trading room. So between the two, I do have 400,000 in our trading room. Now, a couple things that I will just say about this portion of it. Yes, I allocate 300,000 to this portfolio margin setup. You can do it at Tasty Trade with as little as 150,000. Okay, 150,000 is the lowest you can go, and still have access to portfolio margin benefits, leverage. Okay. In addition to this, I will say that while I've committed 300,000 to this program, generally speaking, I'm using about 210,000 is my buying power. That's generally how much money I'm putting to work in the trade. So we always have dry powder in our trading setups. We always have money sitting on the sidelines if we need that. So yeah, there's 300,000 committed to it, but I'm really using about 210,000. Okay, so just a couple notes on that. Now, let's just talk about that benefit of extra leverage. We do a trade in our trading room every single week. We've done it for going on almost 4 years now, and we call it the IWM Weekly Credit Strangle. We call it the Millionaire Maker because this trade has averaged for us. You put up about $3,000. That varies. It can be as low as $2,700, $2,800, can be as high as $3,300, $3,400. But generally speaking, on normal Reg T margin, you would put up roughly about $3,000 on this trade. It's a weekly credit strangle on the IWM, and you would bring in a whopping $38 per contract, which doesn't seem like a lot, right? But that is 1.2% a week. And this is a strategy that has borne fruit for us. It's a strategy, again, that number one, we've done for 4 years now in the trading room. And number two, we do it every week. And maybe most importantly, number three, we've never had a losing week with this trade. We've had to roll it. We're actually in a roll, or we will be in a roll tomorrow when the market opens up on our put side. We've had to roll it many times, but we've never ever had a losing trade. We've never had a losing week on this trade. And it is a trade that has averaged about 50% a year. Sometimes it's a little less. We had our worst year was 42% because we were taking profit captures during the week much earlier. But I think that on this, for this year, for 2023, obviously there's a little bit of the year left to go, but I think we're right now shooting for about 57% APR. So I think most people would say that's a pretty good trade, trade that has a great consistency to it and a great ROI. Well, that exact same trade, not changing anything in the trade, just the exact same trade, but being able to utilize portfolio margin at a 6 or 7 to 1 leverage ratio means that instead of putting 3,000 in that trade, now you're putting 900. It's the same trade. You're going to still make the same $38, but instead of 1.2%, now it's 4.2%. And you're now making almost 200% a year APR. Okay, same trade. It's the exact same trade. We just have to put less money in to get that same result. So that's one of the ideas of the portfolio margin setup. Now, you'll keep in mind we have 5 segments. 5 segments to this approach. Not all of them take advantage of portfolio margin. Some of them are futures contracts. We don't get any extra leverage through portfolio margin trading futures. Okay, there's no benefit there. So it's the normal Reg T span margin that you would deal with. Okay, so it's a little bit of just doing a strategy or a setup with more money involved, but it's also taking advantage of this additional leverage that we have. Okay, so the action plan, again, there's about 300,000 that I've committed in capital to this trade. I use anywhere from maybe 180 or 90,000 of that, all the way up to this past week. I used about 285 of the 300,000. We had a little bit of a tough week last week, getting trades to cash flow the way we wanted them to. It was still a profitable week, but it was a little bit of work last week. But anyway, that's approximately what we'll be using. There are 5 separate strategies. The first one is we do a daily, so it's a 1 day to expiration trade on the NQ, and we call it an in-the-money cover trade. We work towards getting a short or a long position established in the NQ, and then we cash flow it, and that's the first portion. So there's no portfolio margin benefit to this particular trade. The second type of trade that we do, very straightforward, cash secured put or call. Now, a lot of people are familiar with cash secured puts, not as many are familiar with cash secured calls. It's the same strategy. Cash secured put, or what is normally called a wheel trade. Maybe there's a stock trading for 20. You want to buy it at 19. You sell a 19 strike put. If you get assigned, you now own it at 19 instead of 20. That's good. If you don't get assigned, you keep your income, and that's good as well, right? We use this on both sides. We call it a super wheel trade because we do it from the long and short position. We will also occasionally, on like a cash secured put, we'll also use an occasional naked side as well. Or on a cash secured call, we'll do a naked put side, sometimes just to balance out the trade. Number 3 segment of what we do here is just a simple credit strangle on a high IV underline. Right now we're using MSTR. That's a little bit of a tough one to get good liquidity on. We might change that up in the future here, but we're just looking for something with really high IV, and we're selling credit strangles on it, managing that as time goes by, bringing in income. It's a pure income trade. That one is very portfolio margin friendly. That helps a ton on this particular trade. It also helps a bunch on this trade. Okay. Number 4 is the rut credit strangle. I gave you an example a little bit earlier of a trade that we've been doing in our trading room for 4 years, very successfully. I mean, we've never had a losing trade in this setup, and we do it every week, and we've done it for years and years and years. So yeah, it's been pretty successful for us. But a lot of people say, we want to scale and we want to position size appropriately so that if a trade does go against us, we have the dry powder to adjust it, right? And so for me, in my $100,000 model portfolio, $3,000 is about the most that I can commit to this IWM trade, because we usually like to have enough dry powder to scale it 3 times. If it didn't work, I could double up, and then I could add again, do it 3 times. Well, that would put me at about $9,000 of buying power. Have a $100,000 account. We generally don't like to go more than 10% of our portfolio value into any one strategy, setup, or situation. So this is about all I can do in my $100,000 account. So it's great. It's fantastic. I bring in about $150 a month, almost $2,000 a year on a $3,000 investment. It's great. But it's $30 a week, right? $40 a week, maybe in a best case scenario. Well, we're doing the exact same trade here with the Russell. It's just the parent of IWM. IWM is the baby. It's the micro. The Russell is the same index. It's the Russell 2000. It's the full index, right? So there, with $300,000, we have a lot more capital that we can commit to that strangle. It's the same goal, except that now we have leverage. So we're looking for almost 2 to 3% a week is our income off of that. So we're doubling and tripling our income essentially off of the Russell. Okay, and then last but not least is the Theta Ferry. It's a standby trade. It's a trade we do every single day. It's one of the favorite trades of our trading room. And all I'm doing here is I'm adding more contracts. I already do one Theta. A Theta Ferry trade does not benefit from portfolio margin because it is with the ES, the futures contract. And it's about a $14,000 trade. Okay, so I'm pushing it as is in a $100,000 model portfolio account to do one of these contracts a day. One of these contracts a day equals about $100 of profit potential for us. So that's fine. That's all well and good. But for the model portfolio, we can do obviously more of these. We have more money to put to work, so we can do more of these. I usually do between 2 and 5 of these a day. So I'm looking for $200 to $500 a day of profit out of the Theta Ferry portfolio margin setup version. Okay, so let's just go through these a little bit more in detail. The in the money cover on the 1 DTE, a 1 day to expiration NQ trade. We just use one contract. It is about $19,000 of buying power. It's 1 day to expiration. We look for probabilities of profit of about 85% or better. We're looking for about $400 to $600 a day of gross premium, and we're looking to capture $200 a day. That's the key number right here. 200 a day is the goal for this trade. We've been a little bit higher than that. We've been a little bit lower than that, but that's generally where we want to target. Step 1 is to sell a call or a put. So we create a bias in the NQ. I'm looking at, today is Sunday, September the 24th, getting ready for the market open tomorrow. And we have already put our 1 DTE NQ trade in tonight, Sunday. We start our trading week on Sunday evenings with the Theta Ferry and the NQ trade. This is set for tomorrow's expiration. I'm looking at it. $315 is the income that I brought in that trade. It's a bullish setup. The NQ right now is at 14,904, and our put is in at 14,725. So almost 175 points of protection to the downside here on the day. So that's step 1. If the market were to come down, we would take that assignment. Okay. So step 2, we would start with the uncovered potential, just keeping that long position in place. If it comes down, we get assigned. I'm going to hold that long position for a little bit. Doesn't take too many ticks or moves in the NQ to bring in that $200 goal for the day. So we'll leave it uncovered for a little bit, not very long. If it's moving in our favor, we leave it. If it's not, we move right to step 3, which is we do an in the money cover. So we will cover it in the money. That gives us about another 100 points safety net. So we're going to try to get more than a 100-point safety net on the NQ by putting our initial call or put in place. If we get assigned on that, we're going to try to build in another 100-point safety net by covering it in the money. So every day on the NQ, we have about 200 points of potential protection in this trade. That's why it's so consistently profitable for us. Okay. If we average about $150 a day on this trade, which is, by the way, below what we have been averaging, times it by 4 days a week, we do the trade on Sunday, but we don't do the trade on Friday. Okay. That's about $2,400 a month of income. Remember, we're looking for somewhere between 12 and 16K a month of income. Need to specify that is the goal, not the guarantee, right? No guarantees, but 12 to 16,000 a month of income. 2,400 of it should come from the Russell. Second component of the strategy is the cash secured put or call. Could be either one. We just closed out a position in KRE, which was a cash secured put. And in this case, I was using 30 contracts, usually going out 10 days into the future. We're going to sell those puts if it's a long secured put strategy, or sell those calls, as the case may be, if it's a short call strategy. But we're going to sell those puts at a level that we would be willing to take an assignment at. Okay. So if it gets down there, that's fine. If not, that's okay too. We're going to look for about $1,000 of gross premium, maybe even higher than that once we add the calls to it. And we'll just assign it, we'll cash flow it. So that $1,000, we're looking for that over about a 10-day to expiration window. $1,000, If you can do that 3 or 4 times a month, it's going to be $3,000 to $4,000 a month of income, depending on whether you're shooting for $1,000 a week or $1,300 a week. Okay, that's been a very predictable strategy for us going forward. We had a little bit of challenges. We'll talk about returns and what we've experienced in this program in just a minute. And we did have some challenges last month, but the KRE has been, this approach right here has been very solid for us. Now, we have switched out, I will tell you right now, if you're interested in what we're doing, we are now doing a cash secured call, and we're doing it on oil. We're looking to build a short position in oil. And that should bump our income up substantially to something closer to $1,900 per week of income. So, or per 10 days, per 10 days. So that should hopefully give us a little bit of a boost. The third approach to the system is the credit strangle on high IV, high implied volatility underlying. We're using MSTR right now. It's pretty straightforward, using about 8 contracts going out about 10 days. Whoops. Using there we go. 8 contracts, 10 days out, usually 5 deltas, so very far out, bringing in about $1,200 every 12 days, about $4,800 a month in income on that. We've been pretty tight on that. It's tough with MSTR to get good fills, the liquidity that we need. The spreads are wide. So we're probably looking for a new underlying this week, but this isn't about MSTR. This is about this strategy, okay? And that income goal. And portfolio margin is a huge part of being successful with this. The RUT trade, we've talked about that. We usually do that at a 9 delta, 4 to 10 days out. I think on our RUT position right now, I'm just out 1 day. It expires for us on this coming Monday, tomorrow. It's looking to bring in about $900 over this past week. We're looking for about $1,200 over a 10-day period. $900 over a 7-day period. It's right on track. It's right where we want it to be. If you're looking at about $1,100 of profit 4 times a month, it's about $4,500. I will say on our Russell trade, we have been averaging way more than this. We've been averaging close to $7,000 a month in income on that. That's not always going to be that good, but you never know what's going to be good. That's why we have 5 different segments to the plan. And of course, there's never any guarantees, right? The Theta Ferry, most of you guys are familiar with our Theta Ferry. I do 2 to 5 contracts in here, depending on my buying power situation. They're always 1 day out. We scale our entry in, so I'll usually start with 2. If I'm going to do 5 of these, I'm going to start with 2, and then I'm going to put the other 3 at higher, better prices. Sometimes they hit, sometimes they don't, okay? But we're looking for that $1.75 to $2 capture. In our normal Theta Ferry, we look for about 2.25 credit capture. I'm looking for a little less here with the portfolio margin setup and looking to capture about a $200 profit 5 times a week. We do Sunday through Thursday. That's about $4,000 a month. That's been a big important part to driving our income as well. There's no portfolio margin. No portfolio margin on futures contracts. So, if it's 14, 15K per contract for you in your normal account, it's the same for me. I don't get any leverage on futures, okay? So that's the overall system. Again, we've got the NQ 1DTE in the money cover. We use cash secured puts or calls. We use a high IV credit strangle. We do a strangle on the Russell, which is the same as our IWM Millionaire Maker trade, just a lot higher level of capital. And we do the Theta Ferry, which you guys are already familiar with. If all of those click and do their job in a monthly period, that's about $16,000 of income, okay? So we're at September 24th. We're not quite through the end of September right now. We started this program the 2nd week of June. So we have June, July, and August under our belts. June was a blockbuster month. It was over 20K of profit on just 3 weeks. So it was way above average. July was okay. I can't really remember exactly what it was, but I think we were close to about 14 or 15,000, somewhere in there. And then last month was horrible. Last month was a loss of about 16K. But this month, we're looking to be back in where we need to be. We should be above 17K for the month. So, if you sort of this minuses out this, if our bad month last month sort of minuses out our good month this year, we're talking over about a 3.5 month period at this point of about $35,000 of profit so far. And, again, that's with a really bad last month. So is this number, we always look, we build our pro formas, right? And then we look at it and we say, okay, remember, this is best case scenario, right? This is every single one of these categories clicking perfectly. You can probably imagine that doesn't always happen, right? So this is best case scenario. So if we're even close to this number, I'm pretty happy. And I think I've said in our trading room that even $12,000 a month of income off of a $300,000 portfolio, but remember we're using only about 210,000 of it. I think most people would be pretty happy with that, and I think that's a reasonable explanation. I think that sometimes we set our goals and we never hit them, and we don't care because honestly they were a little lofty to begin with. But I think that in this program, I'm very frustrated if we don't hit at least 12,000, and I'm not surprised when we hit 16,000 a month of income. So that's the overall sort of explanation of how we build this trade out. If you are not a member of our trading community and would like to check it out, you can do so. You can go to tradelivewithus.com. We believe it is the best online trading community out there today. We're going to give you trades and setups and ideas and concepts that you have not seen before. I think the portfolio margin one is one of them. If for whatever reason you're just not ready to step up to being a member of a online live trading community and trading a sort of blueprint or game plan that is preset for you that has statistics tied to it, I get that. I understand that. You can go to askyourtradingquestions.com and shoot me a question anytime, and I will engage with you and we can talk. Okay. If you need to get in touch with me, you can do so at scottstewartcontacts.com. All of my contacts are there, and I'd love to hear from you guys. So appreciate you guys. Appreciate the trading community. Appreciate all of the positive comments that we get from you guys as well. Hope you guys are having a good trading week, and we'll talk to you